How to apply and use modelling formulas. Hi guys, I'm Daniel. In this video, we will learn a bit more about modelling formulas in MYGIDE, how to apply and use them to benefit your budgeting, forecasting and planning. In the first two videos, we created a functional three-way financial model ready to accommodate monthly and annual data and played with the model and statement appearance so that our implementation looks the way we want it to. If you followed our instruction videos so far, you would notice that the current state of the formulas applied suggests that if you were to generate the future income statement, balance sheet and cash flows, you would need to enter some income statement and balance sheet numbers manually. This is what we will change today. Having applied the modelling formulas, you will achieve three goals. 1. You will always get up-to-date analysis of the past performance, growth rates, ratios, improvements and changes. 2. Intrinsic trends will always extrapolate a possible future, ipso facto, generating a possible version of a complete short-term and long-term plan. 3. At any time, you will be allowed to override the trends with your own assumptions, thus incorporating your own actions and measures into the plan. Let's go to account management, framework model and income statement. Here we have 5 or perhaps 7 candidates for applying modelling formulas. These are revenue, variable cost, asset sales, net book value of assets sold, other income, other expense and income tax. What all these accounts, where a modelling formula is suitable to be used, have in common is that the numbers come from an accounting or operational system. That means that the historical numbers are typically imported. The second attribute occurs when you can determine a pattern within historical data. For that purpose, we will skip assets sale and MBV of assets sold and leave them without formulas for now, because unless it's an integral part of your business model, it rarely meets this second criterion. Let's start with revenue. Double-click on it in the list of accounts to move it to the active accounts section. In the available formulas section, pick the modelling formulas grouping to filter out just the modelling formulas. Revenue is a very important account. It is, in the majority of all cases, the key driver for your models. It is typically not dependent on the evolution of other accounts in a modelling sense. In other words, historical trends of revenue drive its future development. Oh wait, now you have some serious doubts about what I just said, haven't you? There are numerous real-life situations where revenues are driven by other accounts. Would it be units and prices to start with, number of customers or market share? Yes, you are absolutely right, and we will get to address that in a follow-up video. For now, we will presume that no such underlying information is available and that the only information we have about the revenues is their historical accounts. Therefore, find Modelling Change Formula and double-click. Modelling Change Formula analyzes historical growth or percentage change between two periods and applies the calculated average of the percentage change to drive the growth of the underlying account in the future. By default, the average is calculated from the previous 3 periods. MYGIDE suggests where a formula is to be applied, which is in all future periods. This is important and worth repeating. Modelling formulas are never to be applied for historical or end periods, always in future periods only. We can press save as it is, or we can go a bit deeper and consider how the revenues will be performing on a monthly basis. Revenues can be more or less flat throughout the year, i.e. rent, can display continuous growth, especially in the case of startups, or can show a monthly pattern, which we would call seasonality. Let's conclude that we want a different formula to be applied to monthly and annual periods, and that the budget period will be calculated applying the same logic to the forecast. The modelling strategy where this is not going to be the case will be discussed in a follow-up video. So, highlight the year future periods and press Save. Let's go to Data Room and see what happened with our model. As you can see, MYGIDE has extrapolated historical data into the future with the revenue growth formula. As a result, the accounts that reference the revenue account in their formulas reflect those changes. When you click on Auxiliary Rows, it will show you all auxiliary or modelling rows that have been created for the account selected in the main grid. In our case, it is revenues only for now. As you can see, MYGIDE not only populated the future, but automatically created the auxiliary row change, which calculates the historical performance and drives future development. An average of 7%, 10% and 22% rounded is 13%. This is why 2020 forecast is approximately 14 million, because it's a 13% increase from the 2019 actual amount. MYGIDE took this average and applied it to the modelling change formula. The following year then uses the average of the previous 3 years and so on. This is what we call the default calculation state for the account. You can picture the situation that each time you update your historical data, the average changes, and so do the future amounts. Now, if you do not like the average which is applied, then change it. You can also change the absolute amount, which will automatically delete the manually input growth assumption. In order to return the calculation to the default state, delete all the manually input amounts. A quick way is to highlight the cells you wish to delete and in the context menu pick Reset Formulas. If you highlight an entire row or happen to have cursor on the name or code of the account, you will reset all, including the history, so please don't. This was a simple calculation. Let's move on to add some complexity to your model. Go back to Account Management. Our revenue account from income statement is already selected. Now we set up a monthly calculation for the revenue account. Let's assume that there is a certain seasonality pattern in the amounts. Go and pick Modelling Seasonality Change. MYGIDE suggests this formula to be used only in future and monthly periods, which is exactly where this formula is exclusively used. Press Save. You see here, MYGIDE automatically added additional modelling rows needed for the formula. Go to Data Room, press Monthly View. We are in the year 2020, and see the calculated amounts and averages used to populate them. Select Revenues, and from the list of built-in analytics views, pick previous year's actuals, select all months, and call out Quick Chart. This red line is what MYGIDE extrapolated. And again, if you do not like it, then change it. Let's go back to Account Management and continue with Variable Costs. Variable costs are costs that vary with units or revenue. From the lists of available formulas, pick Modelling Seasonality Ratio or just Modelling Ratio. The difference is such that Modelling Seasonality Ratio analyzes the ratio in the same month in the previous years. It means that what was the ratio in January's, in February's, etc. While a simple modelling ratio takes an average of the previous 3 periods, i.e. the April average to be applied, considers ratio from January, February and March of the same year, not ratios from Aprils in previous years. By formula construction, it returns the same calculation on an annual basis, regardless of which modelling ratio you pick. We go for seasonality. The ratio needs a denominator. Let's ignore the fact that normally it will be unit driven. Let's assume such information is not available and pick revenue as the denominator. Drag and drop it to parameter A, change the name of the auxiliary row or not, and press OK, and then save. Go back to Data Room and see the calculations. Variable costs are now calculated as an average ratio to revenues applied both on monthly and annual basis. If you wish to change the trend ratio, just change it. The next account is OPEX. Since OPEX is a subtotal, we need to go to its daughter accounts and apply formulas there. Applying a formula at the subtotal level would effectively detach the daughter accounts from the model, unless of course we also change the logic from bottom up to top down. Not now though. Let's keep things simple. With the OPEX daughter accounts, we will refresh our memory in how to apply the same formula to multiple accounts. Go to Account Management and initiate Multi-Account Mode. Drag and drop all OPEX accounts. The nature of fixed costs suggests that on a monthly basis, it is good to use a historical average. Calculating the previous period's absolute amounts average and applying it to future periods, and already using modelling change percentages for annual calculations. If you want to keep the amounts the same, you can also use link formula or change period from 3 to 1. Great. Clear the active accounts and let's go to income statement. Continue in multi-account mode with other income and other expense. Here we pick a simple ratio this time and again revenues as the denominator. Confirm the name and press save. Both accounts have now applied a modelling ratio and their future will change proportionally to the change in revenues. The next one is income tax. Deactivate multi-account mode, find the income tax and double-click. For income tax, we choose the income tax formula, which is mathematically the variant of a simple ratio, except that it is calculated only if the denominator is positive. The denominator in this case is profit before tax. Confirm the name of the auxiliary row and press save. A quick glance to the income statement confirms that a full income statement is calculated, except where no data or formulas are applied yet. Let's apply the modelling formulas to the remaining balance sheet accounts now. Go to Account Management and activate Multi-Account Mode. Filter accounts with codes starting with BS and find Inventory, Debtors, Operating Cash, Other Assets, Short-Term Debt, Creditors and Other Liabilities, and drag them to the Active Accounts section. In these cases, we will use current assets and liabilities or its seasonality variant. The denominator is revenues. Remove the filter and drag and drop revenues and press save. Current assets and liabilities is a turn in days calculation, or in other words, a ratio expressed in days. As you can see, their auxiliary rows will therefore express the amounts outstanding in days. Now check cash flow and go back to your balance sheet. If the balance sheet balances, we did a good job. Now display auxiliary rows and try to change a few assumptions to get the feel for your model.